Week over week, ULT ETF continues to make headlines and it continues to attract new investors into this fund. Now, there's some big news that has happened over the past week with ULTY. It just made a big move, and we're not talking about its price action, which it has been doing amazing. It is currently at $6.40. So a lot of people are experiencing capital appreciation slightly, in addition to the dividends week over week. So the big move that we're actually talking about is its assets under management. It's actually the first weekly paying YieldMax ETF that has hit $1 billion assets under management. Now, this is pretty huge. Now, of course, they do have other funds that have hit $1 billion assets under management, such as MSTY, but as far as the weekly payers, ULT is the first one. And as we can see, Friday of the close, 33 million volume. So this is a very popular ETF. It's actually, in my opinion, more popular than MSTY. If you check the YieldMax ETFs subreddit, it's non-stop talk about ULTY. Now, of course, MSTY is still in the talks. A lot of people still love that ETF. And people are using a combination of ULTY plus MSTY for their portfolios. It's no wonder this ETF has gained so much popularity over the past few weeks. And we also want to mention in the dividends for last week, July 18th, the pay date, it had one of the highest distributions since May, which is very good to see that the distributions have been going up as well as the share price. And we received a 10-cent dividend. Very nice to see. Now, it might not seem like a big increase from 9 cents to 10 cents per share, but we have to consider that this is a very cheap ETF, and this means it has about an 80 to 85% forward-facing dividend yield with a 10-cent distribution. And for an ETF that pays weekly, this kind of jump is significant, especially since it's the highest distribution since May. And just with how volatile the market has been, this could signal a sustained period of elevated premiums coming in through the ETF's covered call strategy. While the all-time chart does look pretty ugly, and a few of you do look at the all-time chart, we do have to understand that this ETF underwent a strategy change where they now hold the underlying shares of the respective stocks. Prior to that, it was purely synthetic covered calls. They did not own any of the shares. In addition to, they also utilize protective puts, which also helps with the downside protection in case any one of the holdings, because there's only about 20 to 25 holdings, if any of them happen to tank, those protective puts will activate and it will help reduce your downside for this ETF. Now, one of the reasons why I'm a big fan that this ETF has gained so much volume, so big of an asset under management, is because it's actually going to have tighter bid-ask spreads. So you're going to have increased liquidity with this ETF, which means better price execution as well as more volume and tighter tracking of the NAV. And that makes it easier for retail and institutional investors to trade without getting hurt on their entry and exit prices. And the higher AUM also validates the strategy. As we mentioned earlier, it did not do very well when the fund first came out, but a lot of people were skeptical, and once they changed the strategy, especially changing from monthly to weekly, it shows that investors are very hungry for weekly income, not only from YieldMax ETFs, but also other providers such as Roundhill and RiskReward. People have been requesting, we want weekly dividends. And while the ETF does have a very high expense ratio, 1.30%, because this ETF has become so popular, there's a potential for future fee reductions or expansions. The fee actually used to be 1.40%, but it had a contract that reduced the fee by 0.10%. So we can further see some potential fee reductions in the future. And these funds have become so popular, especially ULTY, that this guy actually put in $170,000 into ULTY, not actually knowing what it does, but he has received about 19,000 in distributions over the past 7 weeks. So that's a pretty good total return for this guy. But because he didn't understand what it actually did, he sold out of his position. But this was over a 10% return in 7 weeks, not only from the share price appreciation, but from the huge weekly distributions. Now, this is something you don't want to do. You don't want to blindly buy. You actually want to know what you're actually investing in. And it's very concerning, especially with the YieldMax ETFs subreddit, where a lot of people are placing money into this ETF, going all in, as well as taking out insane loans, which is insanely risky. As great as ULTY is, it still has downside risk if the market ends up tanking as a whole. And that could be potentially bad for your loans if this ETF happens to experience a very bear market. But if taking out a loan won't destroy your life and you can have a high risk tolerance, it is a very aggressive play that could potentially pay off. And as we can see with this guy, he is all in on ULTY as well as MSTY with an annual income of almost $1 million, which is absolutely insane to see. Not only that, he's also using $400,000 worth of margin in his taxable brokerage account with 5.6 thousand MSTY shares and 105,000 ULTY. And the insane thing is he's young. He's only 26 years old, but he says he's okay with the risk and he doesn't need the money for anything. Now, it's not sure how he was able to amass $500,000 at such a young age, but what we know is that he has insane risk tolerance, doesn't mind losing all his money. And we want to warn you guys that this is some of the risks that we want to be aware of. You can check out the video right here for a balanced portfolio, but you don't want to go all in 100% of your portfolio into any single ETF. Now, the only one that I would do would probably be some of these safer ones such as SCHD, very defensive ETF, very good for preserving your wealth, or even just a simple S&P 500 index, which has gone over time up and up. So if you do want only one ETF to buy and hold in your portfolio, 100% of your holdings, VOO would probably be my pick, or even VTI, the total stock market index, but they have very similar returns because of the weighting to the S&P 500. We also want to mention for the latest distribution for ULTY, which is 10 cents per share as I mentioned, and a forward distribution rate of 85%, absolutely insane, it is 81% return of capital. And a common misconception is that return of capital is just distributing your money back to you, but it's actually very tax efficient. And in the case of ULTY, if this ETF goes up and up, especially with the holdings, which have absolutely exploded in share price, if they sell a covered call on, say, Robinhood markets, and the share price of that underlying stock reaches that covered call strike price or exceeds it, that is going to be the maximum profit for that covered call. But because we had to close that covered call at a higher premium buying to close, it's going to be looking like a realized loss on the taxes. When that occurs, that is where we're actually going to have return on capital, very tax efficient, so your taxes are probably going to be a little bit lower than anticipated because we've been having a ton of the return of capital on a lot of the YieldMax ETFs as of lately. But overall, I do love ULTY, and I wish I got more shares at the $6.20 price range, but it's very likely that this ETF could drop in the future. We don't really know. It could also continue rising in price. We do have to remember we're in a huge bull rally, and that could also be in part with the huge distributions as well as NAV stability that we've been experiencing with ULTY. Now let me know in the comments, are you using ULTY in your portfolio? What percentage of your income strategy is in YieldMax ETFs? And if this week's bump makes you even more bullish.